$20 billion. That is the scale people associate with the collapse of FTX. A company that looked like the future of crypto. A brand that looked smart, modern, and unstoppable. A founder who was treated like a genius. And then it all fell apart. Fast. FTX was not some forgotten website hiding in a corner of the internet. It became one of the biggest names in crypto. It bought attention. It built trust. It attracted users, investors, celebrities, and major media coverage. From the outside, it looked like one of the winners of a new financial age. But underneath that image, the structure was far weaker than it looked. That is what makes the FTX story so powerful. Because this was not just about a crypto exchange failing. It was about image hiding fragility. It was about confidence hiding risk. And it was about what happens when people trust a financial empire that is not built on real strength. FTX looked advanced. It looked legitimate. It looked like the future. Then, in November 2022, it imploded. And the collapse was so violent that it sent shockwaves through the entire crypto world. This is the story of how FTX rose, why people believed in it, what went wrong underneath, and how one of the biggest names in crypto turned into one of the most famous collapses of the decade. To understand why the collapse hit so hard, you have to understand how big the FTX story became. FTX was a cryptocurrency exchange. In simple terms, it was a platform where people could buy, sell, and trade crypto assets. But it was not just another exchange. It became one of the most visible brands in the entire crypto industry. That mattered, because most giant collapses do not begin as obvious disasters. They begin as success stories. FTX looked like one of those success stories. It grew fast. It got attention fast. And its founder, Sam Bankman-Fried, became one of the most recognizable faces in crypto. He was not marketed like a reckless gambler. He was often presented more like a brilliant builder, a serious operator, a smart outsider with a different style. That image helped FTX. Because in finance, image matters. People do not only invest in numbers, they invest in narratives. And the FTX narrative was strong. New finance, smart leadership, rapid growth, massive opportunity. That is how trust starts building. Then the brand gets bigger. The attention grows. The confidence spreads. And the more people believe, the easier it becomes for a company to look stronger than it really is. That is a pattern you see again and again in major collapses. The outside story becomes powerful enough to protect the inside from hard questions. And for a while, that is exactly what seemed to happen with FTX. FTX did a very good job looking important. That is a huge part of the story. The company had branding. It had major visibility. It had mainstream presence. It was not just selling crypto trading. It was selling legitimacy. It felt like crypto was growing up. It felt like this was one of the companies bringing the industry into the mainstream. That image made people lower their guard. When a company looks polished, connected, and respected, many people start assuming the structure underneath must be solid. That assumption can be dangerous. Because external polish is not the same thing as internal strength. A business can look modern and still be weak. A founder can look intelligent and still be reckless. A company can look sophisticated and still be unstable. FTX is one of the clearest modern examples of that gap. The outside looked clean. The inside was far more dangerous. That gap is what makes collapse stories so fascinating. Because when the image is strong enough, people stop asking the hard questions early enough. They assume the size means safety. They assume the attention means credibility. They assume the branding means discipline. But that is not how reality works. And eventually, reality showed up for FTX. At the heart of the collapse was a simple problem. The structure did not appear to be as separate, disciplined, and trustworthy as people thought. That matters because financial businesses depend heavily on confidence. People need to believe their money is being handled properly. They need to believe that internal controls are real. They need to believe that risk is being managed. They need to believe the company is not casually playing with the foundations. When that belief breaks, the whole structure becomes unstable. That is what happened with FTX. As the situation unfolded, it became clear that the image of strength did not match the condition underneath. There were serious concerns about how money was handled. There were serious concerns about relationships between entities. And there were serious concerns about the basic discipline of the business. That is devastating in any financial firm. Because once people begin to suspect that the internal structure is weaker than advertised, confidence disappears very quickly. And confidence is everything in a business like this. A financial platform can survive bad headlines for a little while. It cannot survive a widespread loss of trust. That is what turns weakness into panic. And once panic starts, the speed of collapse becomes terrifying. This is the real core of the FTX story. Trust. Not hype. Not crypto prices. Not branding. Trust. People trusted FTX with money. That is the center of the whole story. When users place funds on a platform, they are making a quiet assumption that the platform is stable enough, disciplined enough, and honest enough to deserve that trust. If that assumption breaks, the company is in serious danger. And if enough people lose confidence at the same time, the danger becomes immediate. That is what makes these collapses feel sudden. From the outside, things can look fine right up until the moment confidence breaks. Then everything moves at once. Users rush to pull money. The company struggles to meet demands. Questions multiply. Fear spreads. And every hour starts making the crisis worse. That is what happened with FTX. The platform went from looking powerful to looking fragile in a very short period of time. And once that happened, the story changed fast. FTX was no longer being viewed as the future. It was being viewed as a danger zone. That shift is fatal, because companies built on confidence can fall incredibly fast when confidence disappears. FTX was not important just because it was large. It was important because it sat inside a bigger ecosystem. That made the collapse wider. When a major company falls in a connected financial system, the damage spreads beyond that one company. It hits customers. It hits investors. It hits business partners. It hits the entire mood of the market. And in crypto, trust was already fragile. That matters, because a collapse does not happen in a vacuum. It lands inside an emotional environment. If people are already nervous, one big failure can change the whole system's psychology. That is part of what FTX did. It damaged confidence across crypto. It made people ask harder questions. It made them wonder which platforms were solid and which were not. It made them doubt the systems, the leaders, and the structures they had trusted. That kind of damage goes beyond one bankruptcy. It changes how people see the whole industry. That is why FTX became such a symbolic collapse. It was not just one company going down. It was a giant hit to the credibility of the crypto world itself. One reason the FTX collapse hit so hard is the speed. The rise was fast. The reputation was big. The fall was brutal. That creates shock. People expect giant collapses to come with long, slow warnings that everyone sees clearly. But often, that is not how it works. The warning signs may exist. The risk may be building. The discipline may already be weak. But the outside image keeps buying time. That is why collapse can feel sudden, even when weakness has been growing underneath. FTX is a perfect case study in that. A company can look exciting, successful, and respected right up until confidence breaks. Then what looked strong starts looking hollow. That is why the most dangerous word in finance might be this: until. It looked stable until people questioned it. It looked credible until trust cracked. It looked safe until users wanted their money out at the same time. That is when the real test begins. And FTX did not survive that test. This is where the story becomes bigger than crypto. Because the FTX collapse is really about human behavior. People are drawn to growth. They are drawn to confidence. They are drawn to stories that make the future look exciting. And when a company becomes the symbol of that future, skepticism often gets weaker. Success creates social proof. Social proof creates comfort. Comfort reduces pressure. Reduced pressure allows weakness to grow. That pattern shows up again and again in collapse stories. A company does not need everyone to understand it deeply. It only needs enough people to believe in the image. FTX had that image. It looked like innovation. It looked like momentum. It looked like intelligence. It looked like a new financial giant being built in real time. That image protected it. Until it did not. And when the image finally broke, the collapse became even more dramatic because the gap between perception and reality was so wide. That is what makes major failures powerful. Not just that they fail, but that they looked so successful shortly before they failed. So what is the real lesson of FTX? It is not simply crypto is risky. That is too shallow. The deeper lesson is this. A modern company can look trustworthy without actually being structurally strong. A founder can look brilliant without building a disciplined system. A brand can look legitimate while the inside is weak. And when money, complexity, and trust are all mixed together, image can become dangerously misleading. That is why controls matter. That is why transparency matters. That is why separation, discipline, and basic financial seriousness matter. Because once people hand over money, they are trusting the structure, not just the story. FTX is a warning about what happens when the story gets stronger than the structure. It is a warning about what happens when image outruns discipline. And it is a warning about how quickly a financial empire can collapse once confidence breaks. That is also why FTX belongs in the same conversation as other major collapse stories. The details are different. The technology is different. The era is different. But the pattern is familiar. Big image, big belief, weak structure, sudden panic, public collapse. That pattern connects FTX to some of the most famous failures in financial history. Because whether the company is built around crypto, housing, telecom, or accounting tricks, the same core danger keeps showing up. When a business depends too much on confidence and not enough on real structural strength, the ending can be violent. That is why these stories matter. They are not just entertainment. They are warnings. They show how people get fooled. They show how systems get stressed. And they show how quickly a respected name can turn into a disaster headline. FTX looked like the future. Then it became a collapse story. That is what makes it so important. Not just because of the money, not just because of the headlines, but because it shows how fragile a financial empire can be when the image is stronger than the foundation. A lot of people trusted FTX. That trust did not survive. And once trust was gone, the collapse moved fast. If you want more breakdowns on corporate fraud, financial collapse, and business failure, subscribe and watch the next video. Because some of the biggest disasters in business history did not look broken at first. They looked unstoppable.